All right, welcome to The Explainer. Today, we're going to dig into something called the Midas Shock, a whole series of crises that just completely rocked the global economy back in early 2026. And look, this wasn't just about numbers flying around on a screen. This was a deep, fundamental rethink of power, of value, and of trust. It was basically a giant warning shot fired right across the bow of the entire global financial system.
So let's just start with the number that kicked this whole thing off. In January of 2026, the price of gold didn't just climb, it went parabolic. I mean, it shot almost straight up, hitting this wild, unprecedented all-time high, over $5,600 an ounce. And to put that into perspective for you, gold had already set something like 50 new highs in 2025. But this was a whole different level.
So what on earth was going on? I mean, this was not just a few speculators getting a little too excited. No, this was a signal flare. It was a loud, clear warning that something deep inside the guts of the global financial system had just broken. And it forced everybody to violently reconsider what a safe asset even is anymore.
To really get the panic, you have to look at the trigger. You know, it didn't come from some far-off market or a big corporate collapse. Nope. This one started right at the very top, with a totally unprecedented event at the world's most powerful central bank.
That's right. The head of the U.S. Federal Reserve was under criminal investigation. The whole thing was focused on these alleged financial irregularities and a massive $2.5 billion cost overrun for renovating the Fed's headquarters. The very idea that the world's top central banker could be facing criminal charges, it sent absolute shockwaves through the markets.
In this quote, it just nails the market's reaction. The US dollar index, it cratered, down 4% in just 48 hours. Investors weren't just fleeing the dollar, they were fleeing a crisis of leadership, a crisis of governance. And gold? Well, gold became the ultimate neutral ground. It was this one asset totally detached from the political mess that was unfolding in Washington. But, you know, a spark needs fuel to really turn into a wildfire. This crisis of confidence, it didn't just happen in a vacuum. For years, there had been this quiet but really important shift already happening, as the world's central banks started to fundamentally change their relationship with the US dollar. Okay, so the numbers you're seeing here, they carry some serious historical weight. For the first time in the modern era, the value of gold held by all the world's central banks was pretty much equal to their holdings of US government debt. Just think about that for a second. The entire world was valuing a physical metal almost as much as the IOUs of the planet's biggest superpower. This wasn't just a market blip, it was a fundamental reordering of how nations store their wealth. And this chart really proves this wasn't some new trend. It was just a dramatic acceleration of something that had been going on for a while. You can see it right there, this slow, steady decline since the turn of the century. Countries have been deliberately, methodically moving their money around, diversifying their holdings, and slowly chipping away at the foundation of the dollar-based financial system. And the buying spree has been, well, aggressive. Nations, especially in that BRICS Plus group, they started treating gold like a golden shield, sort of an insurance policy against US financial pressure and the weaponization of the dollar. For these countries, stacking up gold bars isn't just an investment, it's a declaration of monetary independence. So with the financial system already on a knife's edge, the shock then cascaded out of the paper markets and into the real physical world. A military conflict blew up, and it choked off one of the most vital arteries of the global economy. And man, did it ever reveal just how fragile our supply chains really are. Right. The 2026 Iran war escalated, and it escalated fast, leading to a full blockade of the Strait of Hormuz. We're talking about a narrow channel that about a quarter of the world's seaborne oil flows through. The result? An immediate price spike. Brent crude nearly doubled in just a matter of days.
You know, the International Energy Agency, they don't just throw words like that around. So when they say it, you listen. The impact was just catastrophic. Qatar Energy, a huge supplier of natural gas, declared force majeure, which is basically an act of God clause that lets them break all their contracts. At the same time, oil production in the Gulf just plummeted by a reported 10 million barrels a day, because tankers were just stuck with nowhere to go.
But here's the thing. This crisis was about so much more than just fuel. The Strait of Hormuz is like this massive industrial highway for all sorts of commodities. The blockade severed supply chains for materials that honestly underpin our entire modern world. We're talking about helium, which you absolutely need to cool the machines that make AI chips. Nearly half the world's seaborne urea fertilizer, gone, threatening global food supplies. The list just goes on and on. This one single choke point exposed the hidden weak spots in everything from healthcare to the green energy transition.
So you step back and look at the whole picture, right? What you've got is a perfect storm, a crisis of governance, a huge global money shift, and a physical supply blockade all hitting at the exact same time. And together, they force this complete top-to-bottom reassessment of risk, of value, and of the stability of the entire global financial system.
And oh yeah, just to add another layer of craziness to all this, right in the middle of this global mess, a massive domestic stimulus package started hitting the US economy. It was called the One Big Beautiful Bill Act, or OBBBA, signed back in 2025. But the timing meant that huge tax refunds and business credits landed in early 2026, basically pouring fiscal fuel on an already raging inflationary fire.
$4.1 trillion. That's how much the Congressional Budget Office projected the OBBBA would add to the U.S. federal deficit over the next 10 years. That's a staggering figure. It's almost a full % of GDP in stimulus just for 2026 alone.
And the IMF's warning? It was stark. The US was basically committing to these massive deficits at the exact same moment that its traditional international lenders, the world's central banks, were actively trying to get away from US debt and into physical gold. The big, flashing question became, who is going to finance all this?
Naturally, all this talk about energy shocks and high inflation brought back these old fears of 1970s-style stagflation, that really toxic mix of a stagnant economy and high prices. But there were some key differences in today's economy, like we're way less energy intensive now, and that suggested a slightly different outcome. Maybe not a full-blown crisis, but more of a muted Stagflation-Lite.
And so, that brings us to the name for this whole event, the Midas Shock. It just perfectly captures that moment when the world's attention was violently yanked away from things like central bank policies and paper promises and slammed right into hard, physical, and political realities.
In the end, that crazy spike in the price of gold was just the symptom. The Midas Shock itself was a brutal stress test for the entire global system. It exposed the deep, deep fragility of our supply chains and of the institutions we've put our trust in for decades. It wasn't just a market event, it was a warning, which leaves us with the most critical question of all: who was actually listening?